Well, hello everyone. We're back again with Mike Anderson of Reliance Mortgage and Mike's Mortgage Minute. Okay, so there's been a lot of talk in the news about this group Federal Reserve. They're going to meet June 15th. They're going to raise rates. It's doing this with mortgage rates, or is it? Why don't you give us your thoughts on if somebody's looking at trying to figure out if they need to go ahead and lock in a rate or thinking about doing a mortgage or a refinance, is that going to influence the market, or is it just a toss-up and you just sometimes got to go with the flow?
Well, they say two things about people trying to predict their rates. The people that know that don't know, and the people that don't know that don't know they don't know. I can tell you, I've been tracking the mortgage rates for 25 years, and the Federal Reserve has sort of indicated they're going to raise rates 25 basis points, which translate maybe to a quarter basis points in rates.
Okay.
But rates are so historically low right now that I wouldn't screw around with gambling. I mean, there's no reason for it. I mean, your 30-year notes currently are a little under 4%, depending on credit score.
Right.
Loan to value, because you can't, I tell you, giving somebody interest rate on the phone is like asking you how much a car costs.
Right.
You know, you got to know what kind of car it is. So
consumers should be careful out there if someone's telling them, "Oh, I can get you locked in."
Oh, there are so many
Okay.
hooks on the radio. 30-year rates under 3%. There is no 30-year rates under 3% unless you want to pay 10 points to get the rate down. And all they are is bait and switch, in my opinion. And what they do, they'll advertise a rate, let's say, and the rate may be around, if you put 60% down, if your credit score is 780, and you got low ratios, oh, well, you're at 740, so your rate's going to be this, or you're not putting 40% down, it's going to be this. And there's just no way in hell.
You really don't know until you go through the process, right? And actually
No,
enter
you
the
get a
data
credit report.
and really go through the
Really,
automated
because
system.
if
and
I get a
underwriting.
credit report on somebody, or people call all the time and go, my credit score is 740. In reality, there's 4 different kind of credit reports. When you run a credit report, it could be 680, which can change the pricing quite a bit
Right.
on any loan, whether it be government or jumbo, super jumbo. And a lot of super jumbo loans, they won't do a loan for less than 720 credit score, 740, whatever that the particular company we sell off to has. But all I'm saying is that if you're looking for a mortgage loan and you're wondering what you can do, just call us on the phone. Even if you go to a competitor, we'll tell you how the loan should be structured. And trust me, that's what we've been doing for 25 years, and I think we're the best at it than anybody I've ever been. I tell you, I get probably 15, 20 referrals a month from banks that say, "Hey, call Mike if it can be done. Mike can do it."
And that's what you want. That's what
Absolutely.
you want to hear. So consumers beware is basically
Well,
the message.
you
And
asked
just
about
kind of
rates.
be careful about it.
Here's my own personal opinion about rates. I don't think that rates are going to go up dramatically for the next 4 or 5 years, and I'll tell you the reason why. Governments, not just in the United States, but all over the world, are broke. They have no money. In fact, interest rates in Japan are zero, Germany are zero, and there's so much debt all over the world that governments can't afford to be raised. For example, if the Fed raises the rate 25 basis points, it costs the United States government, what I've read, is $500 million a day in interest. And so I don't think the government's going to
Doesn't make much sense, does it?
No, not at the rate they're borrowing. I mean, we're going to deficit $2.5 billion a day as it is. They don't want to add another $500 million. And the other thing is the economy's really not recovered that much. I mean, it's better than it was a few years back, but it's still not recovered, in my opinion, to where they're going to raise rates dramatically. But to get to your point, if I were buying a house, there's 2 reasons I'd buy one now. Number one, shortage of inventory. Number two, they're going up about 10 to 12% in the Metroplex anyway. And number three, rates are historic low. So why would you screw around?
Yeah.
So if you screw around for until you get another 5% to pay down, it makes no sense to me. So if you're going to buy something, I go and buy it now because prices are increasing, rates can go up. It's just a great time to buy if you can find the property.
Definitely.